Would you mind duplicate? Yeah, it's okay. I'll just do it. All right, welcome everyone. I was just putting out a little announcement for our special time today under a new platform. We're trying out EVMux to see how it goes. Some of you may have used it before. Curious on your thoughts about it. We've still debated on a few other platforms, but it seems to be working. And if you see any trouble, weird, anomalies throughout the show, just let us know, and we'll be happy to address them. But yeah, we had a massive week in crypto. Obviously, Bitcoin made history, getting to 112K before seeing a moderate retrace. It's actually holding up quite well now compared to stock markets, which actually are having a pretty rough day, down almost 2%, the S&P 500 today. There is some rumors that Fed rate cuts will happen in something like a year. But that's a pretty long time, obviously, and not even confirmed for sure whether it would happen. It's all speculation right now. But either way, this is actually our biggest retrace we've seen in crypto and biggest S&P down day in about a week, a little over a week, actually. So what's the latest? Was this predictable? Did we kind of see the rug get pulled out from under people who are FOMOing at the all-time high? Well, there's always a little bit of a letdown. We've seen this story before. We saw the all-time high of 109K back in January, and people were elated. But obviously over those next few months, between January and mid-April, when we finally started to rally again, people lost a lot of money, especially if they liquidated their holdings as prices were falling, and they were hearing all these stories about the tariffs and how much it was going to continually ruin the economy. And of course, all of that FUD, as it normally does, led to a pretty huge rally that got us to this all-time high we saw yesterday. So Bitcoin, of course, has had a huge target on it, but as you can see over the past week, it's not even close to the biggest gainer. We've seen several massive surges, especially from Hyperliquid, up just about 32% in the past week. Bitcoin Cash actually had a pretty big week, up 8%. Monero up over 15%. BitGet token, Pepe is there. Bitcoin BEP2, WorldCoin. Actually, not that many meme coins, interestingly, but many are speculating that may come. We had a kind of a minor altcoin rally after the all-time high for Bitcoin was hit. That's pretty normal. You'll see altcoins go on a bit of a decoupling run where they are able to benefit from the profit redistribution going into them. In terms of social volume, no surprise to see Bitcoin with a 25% increase in discussion compared to the prior week. An all-time high is going to do that. USDC, a little bit of a boost. Avalanche. There's plenty of coins that went up, but a kind of a mix of ups and downs on the social volume end. And then moving over to sentiment, there's a few different ways, as you probably know by now, that we can measure sentiment. And yeah, we're in the euphoric range. It isn't the highest we've been in the last 3 months, but it's getting a little close. If we call right around here, anything above that is a little overly bullish from the crowd, and anything below right there is a little overly bearish, this being kind of the more unpredictable area. Usually when you see these well above the bullish line, bad sign for crypto, and a good chance that we're going to retrace. Kind of saw it pretty consistently here and here. And even on this day, this one had kind of tapered off after. This one we did decline right after. And then, of course, this was the all-time high, and we did drop right after. So, yeah, this is definitely a reliable indicator, and one that we really like to watch. What you want to be doing is looking for these opportunities where you're seeing the sentiment very low, right there, or even right there. Sometimes it takes a day or two. As you can see, there can be a delay, but more often than not, when you see them diverge into 3-month or 6-month anomalies, it's a pretty predictable sign as to where markets are going to go next. But sometimes they can be pretty short term, right? So we did get our retrace. It was only about, if I just hold down shift here, yeah, I mean, Bitcoin's only dropped about 1%. Make sure it's, yeah, actually a little more. I take it back now that I've refreshed. It's dropped about 2.7%, but I don't foresee us getting a huge drop unless key stakeholders are starting to dump themselves, and the crowd just stays greedy, right? Like we've seen the story where we'll go on a huge run, the crowd gets euphoric, the price drops, 2 to 4%, or maybe even a little more, and then the crowd starts to chant buy the dip, or diamond hands, or stay strong, or they're not worried about the dip. And that's a problem. You need the crowd who bought around the all-time high and then saw Bitcoin drop 5% to say, oh crap, I don't want to lose all my money, I'm getting back out. That's the sign that we're reaching a bottom, and then we're going to keep on climbing to another all-time high. So this next week is going to be very telling. Of course, monitor our insights and on social media, and we'll keep you posted on when we're seeing those reactions from the crowd. If Bitcoin starts to test, 105, or, here's hoping not 100 once again. From the social perspective, I also have been using this chart increasingly. You'll notice there's a lot more words on the bearish side than the bullish. That's intentional. We want to balance it out. If you go down here, you're actually seeing bearish outnumber the bullish right now. Or I'm sorry. Yes, sorry, I had it right. Bearish is outnumbering the bullish. Generally, though, these are pretty even with these combination of keywords. I'm going to drop it in the chat just so our... well, actually, I'll give it to you, Max, because I'm not positive yet if that chat room is going to work here on EVMux. So feel free to just share that on YouTube. I find it to be a very useful chart. Generally, when you see a big high red bar like this, you see a lot of retraces. When it's a lot of blue, you tend to see prices rise. Yes, this looks blue, but it's actually about even between blue and red. So that tells me we're in a bit of a tide zone at the moment. If we go down, we can also look by platform. You can see Telegram's actually been pretty consistently bearish, which is interesting. Reddit has been also very bearish. Yeah, it's interesting. Okay. Yeah, it's actually a lot of bearishness on the big platforms. And now that I look again, if you look at the top left bubble there, it's showing 45 on the bearish side and 12 on the bullish side. So even though it should be showing a little red down here, but it's not showing. Even though it's not showing, this actually is telling me the crowd's gotten very bearish just over the past 4 hours. These candles are all 4 hours long. That's a good sign. That if you are just hanging on to your crypto right now, or you're thinking of buying more, there could be a short-term swing coming back up to test 111, 112 again if the crowd looks this bearish. That's almost a 4-to-1 ratio of negativity versus positivity. So not too shabby there, to be honest. Plenty of other things we can look at. This is a little custom metric that just looks at price calls. Of course, we've gone all the way up to 112. So what I can do is just take off the bottom 15 from the bearish side, hit enter, and I'm going to take off the top 15 from the bullish side. So we get a little more evenness here. 3, 4, 5, 6, 7, 8, 9, 10. Okay. So now we have a fair comparison of far lower Bitcoin prices and far higher Bitcoin prices. And it should be showing Oh, you know what? I messed up. Hold on. I want to get this right. We want to take off the low end of the high bars. That would make a lot more sense. We're going to do this one more time. Okay. Yep, that works. So putting them on a shared axis, what do we see? We're going to zoom in to just the last week here for a moment. Yeah, so we definitely have seen a lot of red, a lot of red, a lot of red. And up until this 4-hour bar right here, it was mostly greed and people calling for very high Bitcoin prices. Makes sense. We've been on a heck of a rally. But this tells me the crowd is reacting the right way with a little bit of fear, just like we see with this chart. So both are confirming that the crowd has decided that the fun is over for now, and they're trying to take profit, and they're bearish or they're aiming for lower prices now. And that's pretty much exactly what we want to see as a justification that we're going to continue rising higher. I also wanted to point out the ETFs, which yesterday was actually a great day. On my chart, it's showing 1 day behind, but this is actually May 22nd yesterday. And we saw $934.8 million flowing into ETFs. That is the highest day we've seen since pre-inauguration back on January 16th for Donald Trump. So that's a huge milestone, a little over a 4-month high in inflows. And you can see it's just been consistent inflows throughout. Now, today's going to be telling because, of course, stock markets are retracing. I wouldn't be surprised if there's a pretty decent sized outflow that matches something like, 100 to 200 million. But I don't want to speculate. The chances of that is pretty likely, considering we're having a big drop in stock markets and a mild drop in crypto. And speaking of which, we can compare the two. If I type in one of my templates, I'll just put in SPX. Looking at the last 3 months here, it should be refreshed. Yep. So yeah, you can see the Bitcoin drop. S&P actually isn't showing live right now. I wish it was, but yeah, it's kind of doing this. It's having a pretty big, I think I'll just draw it because 2% in 1 day is going to look something like that. It's a pretty big drop. So both Bitcoin and the S&P are dropping simultaneously. Meanwhile, gold is actually climbing and having a pretty good time right now. Once again, it kind of reminds me of early April. So this is indicative of fear also. Just when gold is going up in general, kind of like you saw here during the tariff outbreak, it's a pretty big sign that the crowd is trying to hedge their bets and own some, capitalist crash proof or capitalist crash hedging like gold, which is going to hold up even if, the U.S. and China really start to get into a tariff war or who knows what. And obviously, we don't get into politics too much, but, the current state of affairs is the U.S. and China have been on a 90-day pause for, I guess it was initiated about a week and a half ago. And of course, that pause was enough to push us up to a Bitcoin all-time high, and the S&P started to really take off again. But nothing's been resolved, right? We're just as far as we're being told, the two countries are in talks of resolving things on a more permanent basis. We're just not there yet. So the closer we get to the 90-day expiration date, if it does get that far, the more fearful you're going to start to see markets once again, and we might see, the same kind of action that we saw in the first week of April when people were really fearful of, world economies deciding to not trade with each other anymore, or at least making it extremely expensive to trade with each other. So keep an eye on that. I also loaded up in so many tabs. Here it is. I loaded up the Alpha Narratives tab, which is super useful. I really like this one. It's up to date, and this big spike here shows that the Bitcoin pizza day was really spiking, of course, because this was the anniversary of that pizza day where someone dropped 10,000 Bitcoin to buy a pizza back when Bitcoin was worth fractions of pennies. Of course, we all laugh now, but it's always a famous moment that guy who bought his pizza for 10,000 Bitcoin, probably kicking himself now, or he had millions of Bitcoin for all we know and still is very wealthy these days. Whales was also big as people were trying to attribute the all-time high. The topic of key stakeholders was coming up. We'll look at that in just a moment. But yeah, the crowd rightfully is trying to discuss the impact of whales on this all-time high. And as you can see on the top left description, it wasn't just for Bitcoin. There's also mentions of hackers' wallets, discussion about Dogecoin whales dumping. I think I saw some Ethereum whale discussion too, even though it's not showing in this explanation. So there was quite a bit of whale discussion over the past week as the crowd is trying to make sense of all of the price climbs we've seen over the past week. You can see here Solana has had a minor bump as well. Lots of just price discussion, but also updates on Solana's tech upgrades, such as the Alpenglow upgrade, reducing transaction finality time, Solnet AI, a DeFi protocol for optimizing profitability. So Solana is starting to get a little bit more attention once again. We saw yesterday Michael Saylor. He had a proposal to pay a Bitcoin dividend to MicroStrategy shareholders. And he also recently purchased 7,390 more Bitcoin for $765 million. These are just wacky high numbers. So there's a lot going on with Saylor. I don't want to read the whole thing, but I would definitely pay attention to what's going on with him because him and MicroStrategy, or just strategy these days, they are holding an extremely high percentage of Bitcoin supply, and the fund holding as much as they are is kind of a double-edged sword because people view him as, Bitcoin's savior who's helping to prop up the price. But if anything happens to his funds or there's a liquidation for some reason, that is a very, very rough thing that would happen to crypto markets. They wouldn't go to zero or anything, but they would certainly see some serious pain. So whether you like Saylor or hate Saylor, the attention is very much on him because of how much influence he has, not just in what he says, but the mathematical influence of his holdings on the crypto markets in general, not just for Bitcoin, but all of crypto, because Bitcoin has such control of the destination of the rest of the markets. Stablecoins here, we see a few different things. They're thriving on Concordium, Liquidity teams, V2 redeployment, stablecoins being digital fiat currencies controlled by non-bankers, spending time with banks to help them understand the stablecoin ecosystem, surge in stablecoin legislation, tons and tons of things going on with stablecoins. And it does appear that we're continuing to get more options and more variety, which is generally good. It keeps things competitive, and the days of Tether just having such a huge hold on the rest of the markets appears to be greatly diminished these days due to the several new ones that popped up, XRP's stablecoin and whatnot. Pepe has also been in the news. Meme coins did have a run more toward the beginning of this week, even though they're kind of all over the place at the moment. We can take a look. I want to talk about whales, but I'll do that afterwards. If we go to social dominance of meme coins, you can see that their biggest spike was actually way back in late April. this was during the altcoin profit redistribution where Bitcoin was finally tapering out after that mid-month rally. And then all of a sudden, altcoins, especially meme coins, went nuts. So naturally, the crowd is going to be talking all about them. And then lately, as you would expect, layer ones got all the attention, primarily almost exclusively due to Bitcoin's all-time high, just causing a ton of excitement there. But yeah, meme coins, they're kind of in the middle of the road now. They're no longer getting tons of discussion, but Pepe, I believe, stood out. If I just go there, take these off for a moment, and we'll just open up the template. Yeah, so transaction volume has been quite up for the last couple of weeks, and we do see that Pepe's up another 3.3%. Cracked the top 25 market cap. Yeah, on-chain wise, it's actually really starting to pick up. So Pepe is doing its best to become the new Dogecoin. Many would argue that it is so far in 2025 in terms of the meme coin getting the biggest spotlight. Whale transactions are up as well. I won't bother to do a supply distribution analysis right now, but yeah, lots of profit taking. That actually is a sign that we may be seeing a bit of a top. Nothing special on dormant activity. Little network realized profit, but we would need a lot more to justify. Like back here, when you saw this big realized profit spike, that was a sign that the rally was likely going to continue. So that's kind of how we use that. Supply and exchanges actually starting to move back to exchanges, so that's not a good sign. Yeah, the big Pepe spike in discussion was back on May 8th and 9th. It's calmed down a little bit, but you do see the dominance climbing, which is why it was showing up on the Alpha Narratives page. RSI, yeah, everything looks a little bit overheated, so I wouldn't be surprised to see a bit of a retrace there. But yeah, a few more things on social narratives really quick before we switch over to Bitcoin whales. Take a sip here. By the way, Max, is the stream smooth and everything? You can just type confirmation in Discord if you want. Cool. Okay. So a few other things. We talked about Bitcoin Pizza Day and whales, Saylor, the Genius Act. It's U.S. political stuff. It's not seeing a big enough spike for me to waste too much time talking about it. Stable coins, Pepe. This big spike was related to meme coins, and that matches up. We just saw how they were benefiting more in the beginning of the week. Bitcoin's all-time high. You can see pretty much when it happened, even though it's funny. The spikes back here, as people were speculating for the all-time high, were bigger than when it actually happened, which was, I think, yeah, I mean, this was the 19th. So yeah, it actually happened here this time, this smaller spike compared to the ones that were compared to the hype up days at the beginning of the week. Bitcoin itself had its biggest discussion rate at the beginning of the week rather than during its all-time high. I find that fascinating. Coinbase, I know that they cracked their stock coin cracked the S&P 500, which was pretty monumental news. GameFi had its moment. Doge here had a huge spike between the 17th and 18th. And then lastly, we see BlackRock. Their shares in IBIT and their potential impact on the market. It's similar to the Michael Saylor and strategy discussions, just their overwhelming holdings of Bitcoin and their impact on crypto is pretty tough to ignore. So anytime they speak up about what they're doing with their holdings, the crowd has to pay attention. Okay, so that's just a little glimpse of where we're at with some of the social narratives. Let's look at the whales here. We're going to zoom into the past 6 months. So what do we see? This is the 10 plus BTC line. I've kind of fallen a little out of favor. It was always known that this included a lot of high exchange, liquidity providers that aren't going to be very relevant to, the day-to-day interactions of real human whales that are making decisions based on market conditions. So I like to look more specifically, if I hide that, at this line, which is the 10 to 10K BTC wallets and their combined holdings. And you can see over the course of the past 6 months, if not the last couple of years, their influence is very correlated to price. When they're climbing, prices usually do pretty well. If they start to drop, that's when you start to see these little collapses go on. Some are big, some are small. Some are directly related to their actions. Some it's more of just like a contribution to the drop, because basically if key stakeholders aren't holding their, Bitcoin, or they're dropping it on unknowing retail holders, there's just nothing significant holding up the price. And when they're accumulating, then their capital is holding up the price, and prices do pretty well. So the dump back here between February and March really was scary. And I remember talking about it a couple months ago on our stream, how it didn't look good. But sure enough, by mid-March, they were starting to accumulate, especially between the 22nd and 25th. Just those 3 days, they added, a massive 48,000 Bitcoin. And that helped us rebound. Then they started to flatten out again. And of course, this was the tariff week between the 1st and 7th, basically. And we bottomed out on the 7th. But they started to accumulate pretty rapidly once Trump at least started to show indications he wanted to negotiate and pause tariffs. He was telling people not to panic so much. And their accumulation just helped Bitcoin explode. We had this big day where we went between 87K to 93K and just kept climbing, hit 100K here on May 7th, and just went all the way up. Now this divergence right here between May 11th and now, this is what we're looking at. So they've actually dumped just slightly, about 13.4K Bitcoin, while the price went up 6.3%. That's a bit of a bearish divergence. It isn't a massive one. We're not seeing this level of dumping like we did back in late February to mid-March, but it's enough to be concerned for sure. So I think going into the weekend and early next week, it's going to be crucial. We'll give some updates on our insights and social media, but you should look out for whether they're starting to really take profit again for like a sustained period like they did. I know it's not a severe slant downwards, but it is a slant downwards, right? We see objectively that the key stakeholders that control prices the most hold less now than they did 2 weeks ago, even though, from 2 weeks ago to now, price is up. Oh, I just did that. Never mind. So price is up 6.3%. You got the idea. So in general, just we're going to watch this line and keep you guys posted on it. We'll have a big update on it next week as well. But if we break it down by tier, just to get a little more specific, yeah, the 10 to 100 Bitcoin wallets have been dumping for quite some time. You can see they're not as correlated because, dumping, 1.1% of their entire holdings. Well, actually, I should do it by, just to be safe, I'll do it by absolute instead. It's going to look about the same. So they've dumped 38K or so Bitcoin over the last 3 months, but Bitcoin's price is up 19.6%. So not that big of a deal that they're still dumping. The 100 to 1K, I would probably argue this, if you're looking at just one tier by itself, this is the one to really hone in on. And yeah, they've accumulated about 133K more Bitcoin. That's massive. And then there's the very large tier that also matters. So 1,000 to 10K, we see they're kind of more of a mixed bag. So they've actually dumped since late April, about a month ago. They're down 45.8K. So they're all over the place, but I just would trust this green line combining all three. Some argue that 1,010K is like a little too much because it's like more exchanges than real people. We still have done some back tests to see that these three combined give us kind of the best results with the price correlation. So I kind of insist on keeping it. But by all means, if you have a different viewpoint or strategy in terms of analyzing those key stakeholders, please do so. Supply and exchanges. Yeah, so Tether and that should actually show USDC. The stable coins are actually going down quite a bit in terms of available supply and exchanges. We'd like to see that pick up a little because we need that as a signal that we can move higher, either because there's enough liquidity or because traders are moving their stable coins onto exchanges to get ready for more buys. Both would kind of imply that there can be more upward movement going forward. So yeah, USD coin looks a little bit better. We don't need Bitcoin on here, but the Tether supply on exchanges going from 56% a little over 3 months ago down to 44.6% now. That's a pretty massive drop. Funding rates, just to see if there's anything going on here. Yeah, BitMEX, Binance, they're both neutral. So not too surprising there. I haven't seen, overly euphoric narratives because I still think people are shaken from what happened in early April. Frankly, I think that's kind of the common narrative is like people don't trust what the US government's going to do next, regardless of whether they're fans of this administration or not. The fact is there's been a bit of misinformation and, accusations of the administration attempting to manipulate markets themselves, foreshadowing that they were going to put a pause on tariffs while markets were closed and no one could do anything. And the only people who knew were the people that knew that pause was going to happen a day in advance. I get all that. And that has caused a lot of shaky confidence in crypto because it's undeniable that crypto is very correlated to the S&P 500 right now. And we just have to be a little aware that we're at the mercy of the macroeconomic and geopolitical policies going on right now. So people are kind of just sitting on their hands a little bit. As we saw with the social trends, there is more fear right now, which is quite interesting because the all-time high literally just happened about 24 hours ago. And all of a sudden we see a pretty mild retrace. And instead of people clamoring to buy the dip, they're just showing pretty significant fear that we're going to go way back down. A few more things on the social side. I wanted to highlight just how significant the talk of Bitcoin is compared to everything else. This isn't just overall social volume. This is sentiment above normal or discussions above normal with sentiment broken down here. And yeah, the negative sentiment isn't that low, indicating exactly what we saw. There's a pretty significant amount of fear. Yeah, positive sentiment is always going to look a little above negative, but 30% of discussions related to Bitcoin being negative is a pretty high number considering the run we've just seen from crypto's top market cap. SWI actually seeing way more negative than positive. I'm not going to get into. I'm not researched enough myself on SWI. I know many of you watching are. It's been a very popular coin for, especially in 2025, but a large chunk of 2024 as well. This much negativity, though, almost half of the discussions being negative, is pretty significant. That's rare, as you can see. No other coin here, maybe Litecoin actually, but most of the time, you're not going to see any other coin with negative sentiment outshining positive sentiment. So, just to give a brief explanation, there was a major security exploit on the Status protocol, over $200 million stolen from liquidity pools, significant price drops, and liquidity issues for Sui-based tokens. Yeah, liquidity issues are a big problem, but historically, we've seen these stories before, and once the dust settles, the negative sentiment can often foreshadow a huge price jump. We can't predict the future. We don't know whether SWI is going to stabilize and the trust will return, but trust is usually correlated with price. So if SWI starts to play catch up after this dump that it saw, it usually restores order. Solana, for comparison, has had a lot of network outages. And we don't have anything against Solana. We know it's up in the top 5 market caps for a reason, but we've seen negative sentiment overriding positive before, and it usually leads to a price jump if you're patient enough and you can handle the volatility. But there's always a risk, especially if it has to do with a hack and there's liquidity issues on the network. So just be aware of that. Monero is up there, DYDX, USD Coin, Kernel, Avalanche, and Litecoin to round out the top 10. If we go to trending words, yep, pizza is still there at number 2. I love it. Cetus, related to that SWI hack we just talked about. Spin, bought on the Binance platform. This is the number 1 discussion. So this is a discussion on how people can participate, waiting times between spins, commands used to trigger the spin action. It's kind of a gamified promo on Binance right now. Wells Fargo in there, and then you see SWI still at number 10, even though the hack happened about a day ago. So that's just a little bit on the social trend side. I could also look at historical crypto trends. You can see some of the midterm, 3-month long discussions. And Tariff, of course, is a word you're still going to want to keep an eye on. It actually had a bit of a spike today, correlated with this retrace we saw. Trump seeing its biggest spike in almost a month, and inflation on the way down. We'll probably see inflation discussions pop back up on the next FOMC decision. ETFs on the way down, even though we just had a pretty historic day. Alt season, look at that. So alt season, we've talked about how it consistently is a top indicator, and it had its highest spike in about 3 months yesterday as Bitcoin hit its all-time high. Actually, I should say the day before. The date axis is a little bit too zoomed out, so this could overlap with the 22nd too. It depends on time zone. Meme coins on the way down. Real-world assets have had a few moments, but they're sloping down a little bit. AI agents way down, and DeSci just had a huge spike in mid-April. And they've dropped off considerably now. So yeah, social trends wise, all talks are going to be based around Bitcoin and its recent all-time high. And I'd pay attention to the latest stuff going on with Trump and tariffs right now as well. Lastly, I wanted to show you maybe not lastly, I've got a couple more things, but I wanted to show you the Whale Watcher dashboard, which is showing the latest on which coins are seeing significant amounts of their market caps moving to exchanges, which is usually not a good sign. Sin Futures just saw a $3.9 million move to, it looks like Bybit, and that makes up 17.33% of their entire market cap. So get ready for a lot of volatility. If Sin Futures already had some sell-offs on Bybit. First Digital USD always has some pretty significant moves But of course, it's a stable coin. We won't waste too much time talking about it. Illuvium, if you're a fan of that altcoin, 1.2% of its entire market cap moved to exchanges. Maple, half a percent of its entire market cap, $2 million. Another stablecoin, Frax, almost 0.5% of its market cap. Mantra, the Sandbox, SPX 6900, a meme coin. WorldCoin, Ondo, Polygon, and even Pepe down here saw a couple $1.7 million transactions to further the argument. And this was actually just 2 hours ago, the most recent ones on this dashboard outside here, which was also 2 hours. So that strengthens the argument that Pepe may be seeing a bit of a top right now. Sin futures, even more recent, I stand corrected. Yeah, okay, last thing I want to show would be just a few Bitcoin macro metrics, beginning with its utility. Transaction volume actually had its biggest day in about 3 months. It's about $34.57 billion in transaction volume. That's significant. Network looks pretty normal, all things considered. Not a huge spike in active addresses. Circulation's about on par with what we've seen. Network growth, though, has had a pretty big jump. That day, the day before the all-time high, 356.49 thousand new addresses created. That was the highest in about 3 months. Generally speaking, that's a good sign long-term for the network, but we're actually going to release a video very soon talking specifically about network growth. And when you see a sudden spike in price, kind of like we had over the last 4 or 5, maybe 6 days, and that correlates with a network growth spike, that's usually FOMO, and that's usually a sign of a top. It doesn't mean it's going to be a long-term one, but yeah, this lined up well with the all-time high, and we've retraced right after. So the signal came true this time around. It usually does. That's why we follow these signals. Also, MVRV, very important to watch right now. 30-day MVRV at about plus 7.9%, down a little bit from the all-time high, obviously, which got us above 10%. But we don't want to get, to that danger zone of around 15%. If it gets up here, either of these lines really, if they're above this line, that's a signal that we are way overheated and likely due for a retrace. That said, even if we're above 0%, that means we're a little overheated compared to what the average moments are in the course of Bitcoin's trading history, which is a zero-sum game, just like any other asset out there. So ideally, we don't want to see a retrace. I'm sure most of you watching are still bullish and hoping Bitcoin can continue to climb to 115, 120K right away. But the best times to buy mathematically are usually when both are in the negative, like we saw when we were at peak tariff fear here the first week of April. A few other things. We checked out funding rate. We saw whale activity was way high. Not a surprise there. All-time highs always bring out a lot of polarization. This is what I wanted to show. Mean dollar invested age has been dropping pretty significantly over the last 5 weeks. The average age of wallets holding their respective Bitcoin was about 443 days back on April 20th. And now it's at 429. That's a pretty sizable drop. I'll just show you the insight that we highlighted yesterday that highlights it with a nice little arrow. So these are the last 5 years of bull cycles that were justified by the mean dollar invested age dropping. This essentially means that those stagnant whales and just all the older dormant wallets in general, they were starting to move coins back into circulation. Maybe they were taking profit, but this is kind of like a realized profit on steroids, where as a rally is beginning, if you see the mean dollar invested age going down, it's usually because the stagnant wallets are taking profit, and it's adding a stoke to the fire, in the bullish fire, that is, where the bullish cycle continues because all these coins are surging back into circulation, allowing the utility to really thrive during that time. And so when you're seeing the mean dollar invested age dropping as prices are rising, it's usually justification that the rally is going to continue for a bit longer, especially when it's a really aggressive downslope like we saw during that COVID year in late 2020 to early 2021. And then another one from October 23 to March 2024, great time for crypto. And then, this one where we went all the way up to 109K when Trump was inaugurated, that was when we saw that top. And then this latest one, which is kind of the post-tariff announcement rally, where everything was put on pause and people got encouraged that the US and the rest of the world would find an agreement. And that's kind of where we still are right now, with every day being a new story where we don't know what's going to occur, but the pause is at least promising. And, Switzerland facilitating or moderating, however you want to put it, the talks between them and making good progress. That's largely why I think a lot of people see the stock market and the crypto market rallying the way they have over the last couple of weeks in particular. All right, well, that'll about do it. Maksim should be back with us next week. We'll see, but we'll give you guys a little announcement ahead of time. I'm excited to continue to explore this platform. Let us know what you thought about the quality of this stream. It's very important to us to get a little feedback and get an idea of what you like and dislike to ensure we're giving you the best product out there. But big shout out to Max Balresh today for facilitating this new platform. I kind of decided we needed to go a different direction now that Skype is gone. Most of you know we were using Skype, and that no longer exists as of 3 weeks ago. So thanks for the quick learning curve on this, Max, and appreciate you hosting the stream and monitoring chat. We will be back at it next week, and wishing you all a safe weekend in the meantime. Looking forward to talking. Take care.